Welcome to the Deep Dive. This is Talk Tickers, where we really try to cut through the noise of earnings calls.
Yeah, bringing you the insights that matter.
And today, we're taking a deep dive into Bassett Furniture, specifically their second quarter fiscal 2025 earnings call.
Right. And as you probably know, the whole home furnishings industry is facing some, pretty intense headwinds right now.
Definitely. But Bassett's been on this year-long journey, strategic restructuring. Yeah. So our mission today is to get past the jargon, past the numbers, and show you exactly how they're tackling these challenges and, what it all means.
It's a really interesting situation. You've got this historically weak housing market, interest rates are still high, and consumers are just hesitant, especially with all the talk about tariffs.
Yeah, that uncertainty is key.
But despite all that, Bassett has managed to show some tangible improvements. Maybe let's start with the hard numbers. A quick snapshot of Q2, which ended May 31st.
Okay, sounds good. So what's that snapshot look like?
Well, we're seeing a positive shift, which is encouraging. Consolidated sales were actually up slightly, 1.1% year over year.
Good, 1.1%.
And if you actually take out the sales from Noah Home Incorporated, they closed that down late last year. The increase is more like 2.5%.
So the core business is doing a bit better than that headline number suggests. Considering the market, that's something.
It really is. And what's particularly striking, I think, is the profit picture. They reported operating income of $2.5 million. That's 3% of sales.
And that's compared to?
A loss in the same period last year. So a really significant turnaround there.
Wow, okay.
And that flowed right down to the bottom line. Diluted earnings per share came in at $1.22 last year. A loss of $1.82.
So $1 per share swing almost. That's quite an inflection point, like you said.
Exactly. It suggests the restructuring is starting to bite.
It's pretty incredible they're managing that profitability swing with the macro environment being what it is. Can you maybe elaborate a bit more on those pressures? How tough is it out there?
Oh, it's tough. I mean, for home furnishings, it couldn't be much harder right now. The housing market is just stuck in low gear, right? Turnover is low. Interest rates mean financing big purchases, like furniture is more expensive, so people think twice. And then there's just this general consumer uncertainty.
You mentioned tariffs earlier, too.
Yeah, tariffs are a big part of that uncertainty. People hear about potential price hikes on imported goods, and they might just hold off on buying that new sofa or dining set. It all leads to hesitation.
So against that backdrop, Bassett launched this 5-point restructuring plan about a year ago. What were the main pillars of that strategy again?
Right. That plan is really their roadmap. 5 key things. First, innovative products. Second, focusing on quality craftsmanship, something they're known for.
Okay.
Third, strengthening both wholesale and retail channels. Fourth, expanding their custom design services. That's a big one. And fifth, maybe the most critical right now, just relentless cost reduction, finding efficiencies everywhere.
And tariffs specifically, how did they navigate those this quarter? It seems unavoidable for anyone importing.
It is. And while Bassett does make or assemble about 80% of their wholesale shipments here in the U.S., which helps a lot.
That's a high percentage.
It is. It's a key advantage. But they still import components, fabrics, plywood, mechanisms, and some finished goods from places like Vietnam and India.
Right.
So this quarter, those tariffs, or the anticipation of them, forced their hand. They had to put through a 3 to 5% increase in wholesale prices. They said they really didn't want to, but it was necessary.
Understandable. So bearing that context in mind, how did actual sales orders track through the quarter? Was it steady?
It was kind of a story of 2 parts. The year started off pretty strong, quite robust order pace, actually. But then they saw a noticeable slowdown after April 2nd.
April 2nd. Any reason for that specific date?
They cheekily called it Liberation Day on the call, apparently referencing the end of some tariff relief measure. But yeah, March was strong, then April and May saw declines. It just shows how quickly sentiment can shift.
Interesting. Okay, let's drill down into the channels. What did wholesale orders look like overall?
Overall, wholesale orders were actually up 2.7%.
Okay, positive territory.
Yeah, but like I hinted before, it's nuanced. The really strong part was orders going to their own network, the corporate stores and the licensed Bassett home furnishing stores. That channel grew 9.6%.
So their direct network is performing well. What about sales to other retailers, the open market?
That's where the weakness was. Wholesale business from the open market actually declined by 6.6%, and that was mostly concentrated in April.
Any specific reason for that drop?
It seems primarily due to lower sales in what they call their club level program. These are often larger retail partners, and specifically the container direct accounts.
The ones ordering full containers directly from overseas.
Exactly. Those big buyers hesitated on placing orders for imported goods because of all that tariff uncertainty we talked about.
Makes sense. Any other factors?
They also mentioned a 22% decrease in shipments for their Lane Venture outdoor line, but attributed that mostly to the specific timing of orders from one significant customer.
Got it. Okay, shifting over to the retail side now. How did their own stores perform?
Corporate retail deliveries were up 7.5%. That's good. But written sales, so new orders taken in the stores, they saw a slight decline of 0.8%.
So deliveries up, written slightly down. How does that square?
Well, here's the interesting part. Store traffic was down, which isn't surprising given the market, but their close ratios, the percentage of people walking in who actually buy something were higher.
So fewer shoppers, but the ones who came were more serious buyers.
Precisely. It helped keep written sales almost flat despite fewer people coming through the doors. It suggests the Bassett brand and offering are resonating strongly with those motivated customers.
And what kind of products were those customers buying? Anything stand out?
Yeah, they highlighted strength in their core stuff. True custom upholstery, including some new leather options they introduced, performed well. Also, domestic motion and reclining products.
So customization and comfort, things they're known for.
Exactly. And some of the new whole home wood collections, like one called Copenhagen, are apparently retailing well. They've got a couple more, Newberry and Andor, coming later. Plus, a new domestic Benchmade dining program also sold well at wholesale.
Okay, good product momentum. Let's pivot to the operational side, efficiency and financials. What about gross margin?
Consolidated gross margin looked good on the surface, improved to 55.6%. That's a 310 basis point improvement, so 3.1 percentage points.
But there's a but coming, I sense.
There is, yes. A significant chunk of that improvement came because the prior year had some inventory valuation charges related to their restructuring. If you exclude those charges from last year's number, the margin this year would have been essentially flat.
Okay, so progress, but maybe not quite as dramatic on the underlying operational margin yet. Still, flat isn't bad in this climate.
Not at all. And where they really showed improvement was on expenses, SG&A, selling, general, and administrative costs.
Right, the overhead.
As a percentage of sales, SG&A decreased by 330 basis points. That's a direct result of the restructuring and cost optimization efforts paying off.
So they're becoming more efficient.
Very much so. Get this. They actually spent $1 million less in absolute dollars on SG&A compared to last year, while delivering $3.8 million more in consolidated sales.
Wow. Selling more while spending less on overhead. That's the definition of operational leverage.
Exactly. That's a really positive sign for future profitability if they can maintain sales growth.
And were they making progress on inventory? Sometimes restructuring leaves excess stock.
Yes, they highlighted good progress on converting discontinued and excess inventory into cash. They noted this will probably have a modest drag on retail gross margins for the rest of the year as they clear it out, but it's the right strategic move to clean up the balance sheet.
Makes sense. All these moves, cost control, inventory management. How does their overall financial health look? Liquidity-wise?
Very strong. They generated $7 million in cash from operations during the quarter. And they ended Q2 with a really solid liquidity position, $59.8 million in cash and short-term investments.
And debt.
No outstanding debt, zero.
Wow, that's a strong balance sheet. Gives them a lot of flexibility.
Absolutely. A significant war chest, you could call it, for whatever comes next, whether it's navigating downturns or investing in growth.
Speaking of growth, let's shift gears to their initiatives and the future outlook. E-commerce has been a bright spot generally. How's Bassett doing online?
It's a definite standout for them, too. Sales on BassettFurniture.com were up an impressive 31% in Q2.
So 31%, okay.
And that follows a 36% increase in Q1. So really strong momentum.
Is that just more people visiting the site?
Actually, no. They said website traffic was basically flat. The growth is coming from higher conversion rates, more visitors actually buying, and better reach into markets where they don't have physical stores.
That suggests their digital marketing and the online experience are really clicking.
It certainly seems that way. Their digital strategy is definitely resonating.
What about their broader marketing mix? Any changes there?
Yeah, a few interesting things. They tested direct mail again, specifically for launching that Copenhagen line, and said it was successful enough to become a permanent part of their strategy now.
Interesting. Direct mail making a comeback.
Apparently so for them.
Yeah.
They also tested spot TV, but results were kind of mixed region dependent, and they did some private sale just before Memorial Day, which effectively pulled some holiday demand forward. So they're definitely experimenting and tweaking the mix.
Now, one thing that sounds really promising is their Bassett Custom Studio program. Can you tell us more about that?
Yeah, this seems like a key growth engine. It's essentially a store within a store concept for independent retailers. The program grew double digits in the quarter.
Double digits, nice.
And they added 7 new locations, bringing the total up to 54 of these design studios within other furniture stores.
What's the appeal for the retailer?
It's a relatively low barrier to entry for them to offer Bassett's custom capabilities. They leverage Bassett's quick fulfillment on custom orders, which is a big selling point. Bassett thinks they can add maybe 6 to 8 new studios like this per quarter going forward.
That could scale up pretty nicely.
It really could. It expands their reach without the capital cost of building full new stores everywhere.
And how about the interior design community? Are they engaging more with designers?
Yes, another double-digit growth area for them. They specifically called this out as a key strategic focus. Apparently, more designers are showing up at industry markets like High Point.
And why is that segment attractive?
Designers often prioritize product, quality, and service over just the absolute lowest price. So it's potentially a higher margin channel and, importantly, probably less sensitive to those tariff concerns we discussed earlier.
Right, value over pure cost. Makes sense. Looking ahead, any plans for more of their own Bassett Home Furnishings stores?
Yes, but measured expansion. They're planning 2 new stores, one in Cincinnati and one in Orlando. Construction should start this fall, aiming for openings in Q1 of fiscal 2026.
Okay.
And they're also reopening their Concord, North Carolina store in October after a remodel.
What's the long-term thinking on store count? Are they planning a big rollout?
Doesn't sound like it. They described their approach as conservative. The goal seems to be around 2 to 3 net new stores per year. They're leveraging their existing infrastructure like distribution and targeting markets where maybe there aren't many strong independent furniture retailers left.
So targeted, strategic growth, not just expansion for expansion's sake.
Exactly. Thoughtful placement.
And finally, capital allocation. With that strong cash position, what are they doing for shareholders? Dividends? Buybacks?
The board is set to consider declaring their regular quarterly cash dividend of $0.20 per share next week, so likely continuing that.
Okay.
Share repurchases seem more opportunistic. They did spend about $1.7 million on dividends in Q2 and only about $400,000 on buybacks.
So prioritizing the dividend right now.
Seems that way. Their overall capital investment for the year is projected between $7 million and $9 million, mostly going towards store remodels, technology upgrades, and funding those 2 new store openings. So balancing shareholder returns with reinvestment.
Okay, great overview. So let's try and connect the dots here. What does all this mean for you, the listener, trying to understand Bassett's position?
Well, I think the main takeaway is this. The furniture industry is definitely in a rough patch, no doubt about it. But Bassett isn't just sitting back. They're actively executing a plan, this restructuring, and it's starting to show real results, especially on cost control and finding these new growth avenues.
And that domestic manufacturing footprint, nearly 80% U.S. made, that seems like a massive advantage right now, doesn't it? A real insulator.
Huge. It gives them a level of control over production, costs, and lead times that competitors relying heavily on imports just don't have, especially with all the global supply chain and tariff uncertainty. It's a key differentiator.
And their focus on e-commerce and the design community that feels like a smart pivot, moving towards channels that might be more resilient than traditional retail, tied purely to housing.
Exactly. It's diversification. They're actively building up these channels that can compensate somewhat for the slowdown in store traffic or housing-related purchases. It's about finding growth where it exists.
And underpinning it all is that strong balance sheet. No debt, nearly $60 million in cash. That gives them options, stability, staying power.
Absolutely. It provides that crucial flexibility to invest strategically, whether it's in marketing, technology, or new stores, and also to keep returning cash to shareholders consistently, even when the macro picture is cloudy. They're running a tight ship financially.
Right. Okay, which brings us to our favorite segment.
Yes. The "this is not financial advice" segment. And we really mean it. This is purely for entertainment, for discussion. Always consult a qualified financial advisor before making any investment decisions.
Definitely. But it's fun to think about potential angles. So given everything we've discussed, the tough macro backdrop, the likelihood that the market kind of lumps all furniture companies together.
Paints them with the same brush, as they say.
Exactly. But Bassett seems to have these unique operational strengths, and their strategy is showing results. How might someone think about that from a, let's say, unconventional trade perspective?
Okay, here's an outrageous but plausible idea, just thinking out loud. You could imagine someone betting specifically on Bassett's relative outperformance.
Meaning?
Meaning, maybe the whole sector stays weak, but Bassett does better than most. So, one theoretical way to express that view could be something like a long Bassett, short the sector strategy.
Okay, break that
You
down.
take a long position in Bassett furniture itself, betting on those strengths we talked about, the domestic manufacturing, the strong balance sheet, that double-digit growth in e-com, and the designer channel, which are maybe less tied to just housing starts.
Right, betting on their specific advantages.
And then, simultaneously, you might take a short position against the broader sector, maybe through a furniture retail ETF, if one exists that fits, or perhaps a basket of peers you think are more vulnerable, maybe companies heavily reliant on those import-driven container direct club programs that seem to be struggling.
So the idea is, even if the tide is low, Bassett's boat is built better to navigate it and might even gain ground relative to others sinking faster.
Kind of, yeah. You're essentially betting on Bassett's strategic insulation and their adaptability, allowing them to not just survive, but potentially gain market share from competitors who are more exposed to tariffs or the traditional retail slowdown. It's a bet on differentiation winning out.
Interesting concept. Again, absolutely not financial advice. Just a thought experiment.
Precisely. Okay, so wrapping things up, Bassett Furniture showing real, tangible improvement in profitability, cost control, even amidst this incredibly tough market.
Driven by that strategic restructuring, their strong U.S. manufacturing base, and finding growth in direct-to-consumer, e-commerce, and the design channel.
And hopefully this conversation shows why digging into the details of these earnings calls, beyond just the headline numbers, can give you so much more context and understanding.
Absolutely. You see how they're actively managing the business, responding to challenges, not just being carried along by the market currents.
And one last time, please remember, nothing we've discussed today constitutes financial advice. Always do your own homework and consult with a professional.
So we hope this deep dive into Bassett Furniture's quarter was useful for you. It leaves us with a thought. As Bassett looks ahead, what do you think their biggest ongoing challenge will be? Is it attracting new customers when the housing market is sluggish? Or is it navigating that still unpredictable global supply chain and tariff situation? Something to think about.
Yeah, curious to hear what you think. Until next time on Talk Tickers.
Keep digging into those numbers.